Hey everyone, and welcome to another dividend portfolio update here. My name is Dennis Trufin, and today we are going to be going over how much I made in dividend income for the month of November. Now, the cool thing is, this is actually the highest month I've ever earned in my M1 Finance dividend investing portfolio. So what we're going to do is break this all down and kind of take a look and see how we did in total. Now, if you have been following along, we were talking about how this might potentially be the best month, and it ended up being so thus far. So I'm excited about this. You're going to see here, currently on my Dividend Dennis portfolio, our current value here is sitting over $17,404. This is pretty exciting. I'm really happy to see it. Just last previous episode, we hit over 17. One really cool thing is too, and I love showing this when we are talking about this portfolio. I started this portfolio with $100 back on January 23rd. So of 2019, I should say. And so we're about to hit 2 years on this portfolio, but I started off with very little and I just started investing slowly but surely over time. So if this number looks really large to you, don't worry. You know, if you get started small and you start building up, you will have a good impact on your portfolio. Now, we'll talk a little bit about how this portfolio did, as well as, of course, talking about the dividends and then showing you guys how much I've made across the board year to date, as well as some other cool little stats. But before we do that, in order for me to pay my bills, because I do need to eat and pay stuff, if you guys want to check out Earnest in the show notes down below, they are a student loan refinance company. So if you are somebody who maybe has some high interest rates on your student loans, check them out. It takes about 2 minutes or so to see if your rates can get lowered. And heck, that extra money you can utilize to be investing more in the market. Now, the cool thing is, in the link down below, it does help support me, but it does also give you a nice little bonus. So make sure you check them out in the show notes below. So we're back here with the portfolio, and now we're going to start breaking some stuff down. You could see in our total gains right over here in our all-time, we're sitting at $2,867. This is money weighted returns, which includes our dividends, as well as including some of our profits that we might have sold off from earlier. And for anybody that's curious about our unrealized gains, right over here, we have over $2,278, which is about 15% for our portfolio, which is pretty incredible to really think about, right? Like when you really are thinking $2,200, obviously for me, that's over the span of 2 years almost, but that is me just, getting started very slowly, trying to gather, how I want my portfolio to be, as well as, just kind of getting more comfortable with investing a lot more money. So it didn't happen overnight. It took time to get there. But like we talked about, in today's episode, we're talking about how much we made in dividend income, because probably you, just like myself, get really, really excited about having this dividend income coming in. And before we do that, I will also show you guys some upcoming trades here in today's video, so make sure you are sticking around for that. Hopefully I don't forget, because sometimes I do forget to go back and do some of that stuff. But we're going to go into our activities feed here. And so we're going to be able to check out and see how much we earned in total dividends. Really quick too, if you are somebody who's curious about this platform, this is M1 Finance. I will have a link for them in the show notes as well. They just help support the channel if you guys sign up with them. But I have tons of tutorials on my main channel if you guys are curious on how to use this platform. You can leave comments in this video and I will link you up to any questions you might have, because I've probably made a video for it. And if I didn't, I will for sure make one in that case. So right over here, what we're going to be able to do is look at all of our activities, but we can actually break this down to just dividends. So let's go ahead and do that. And obviously we are focusing in on November dividends, so we're going to kind of cross out these October ones. You can always watch previous episodes if you want to see, all the individual dividends from there. So you can see down here on November 2nd, I got paid out on one time with AT&T. We got paid out a whopping $13.10. This is huge. That's a lot of money that we are getting paid out. And if we actually take a look at AT&T in our portfolio, just to kind of do a little bit more of a breakdown with this stock here. Currently, right now, once it loads up here, we have 28 shares of AT&T, average share price of $29.96. So we're actually still just a little bit under where the market is. So we could buy more if we wanted to dollar cost average, or what they call DCA. So you can see here, I'm in my all tab. Because of the money weighted returns, I'm actually only down 33 cents, because I've earned a whopping total of $25.75 from AT&T. But of course, the market has dropped it down to about 26.08. So with those two things combined, I'm only down about 33 cents when you take all things into account. So not too shabby there. So let's go back over here and see the next one on this list. So next up, we have all the way on the 12th. So this was about a 10-day span from my first dividend in the month to my next one. And then we have it from Apple, and that was a total of $3.02. So that's pretty good. Obviously, Apple doesn't pay a very high dividend. We're going to go into my Apple stock right over here. And we're going to see, even though I own over 15 shares of this company, they don't pay out a lot. Their dividend yield is really, really low. And for anybody else that is trying to become a dividend investor, you typically hear a lot of people talking about 4%. 4% is what you want for dividends. And that's fantastic. But the problem with a lot of companies that are paying 4% or higher is that their dividend increases are not that stellar. And so I'm going to show you here on seekingalpha.com. This is where I house kind of a lot of information for myself when it comes to figuring out what companies I want to invest in and how I want to invest. So if we're going to go to Apple right over here, what we're going to do is we are going to go to their dividend section. And this is going to give me a plethora of information that I want underneath their dividend scorecard. So we saw here, it's fairly close to where it was on the M1 Finance because it's 0.70 dividend yield moving forward. And so what this is going to show us is that's how much you're going to get per, let's say, whatever share that you own, you're going to get 0.7% of that price point because it's at $116. That equates to 20.5 cents every single time they pay you out, which is quarterly. And then that's per share. So if you have multiple shares, that's just going to be more money for you. But what I care about is the dividend increases. And this is right over here with Apple. Now, this isn't the best, but Apple does have some really other great benefits aside from just the dividends. So on average, they increase their dividend by 10.5%. So that is effectively a raise for you if you already have shares in Apple. You saw we have 15 shares in my portfolio, which means that if next year they increase it by 10%, I'm going to make 10% on my money for dividends for doing absolutely nothing extra, just having the company's shares that I currently have. And so that's dividend increases, which for me is one of my favorite things when it comes to dividend investing. And I honestly don't think a lot of people talk about that kind of stuff. So to me, that is huge. Another great benefit with Apple is that they have a very low payout ratio, which means this 10% is going to be fairly consistent for a long time, as well as, Apple, of course, has a lot of growth opportunities for their stock for the time being. And I'll just give you an example here. If we go to their dividend news. Now, before I get into it, they did a stock split, so it dropped how much they're paying per share to 20 cents or 20.5 cents back from 82 cents. So the only reason for that was because they split their stock. But as an example, back on April 30th, they increased their dividend by 6.5%, lower than their average, but it's still a decent amount to increase your actual earnings. So if you had shares in Apple, you were getting 77 cents, and now you're getting 82 cents. And if we go back just a little whiles longer, you can see, again, not the best on this one. So the 5-year average is a little bit on the downward trend here, it looks like. But if we keep kind of move back here, you can see back in May of 2018, it was almost 16% increase. To me, what that really says is that you're getting a 16% increase for just holding on to a company and doing nothing extra, which is huge for me. To me, that speaks volumes. I want to make more money doing less work, and who wouldn't want to do that, right? So that's how I see it. So if you see something like that where I have a low dividend yield and people are talking about 4%, that's what I look for. I look for companies that have good dividend growth, so that way I have an opportunity for those dividends to be worth more down the road, even if they're not necessarily worth it now. And a lot of that is also called yield on cost, which we can always talk about in the future or maybe later in this video. So that is going to be Apple that paid me out. Let's go back to this list here. So after Apple, on the 13th, so the very next day, we got paid out from actually 3 different companies, which is always a nice thing to get paid out multiple times in a single day. This one was from Ally Financial, and we got paid out a total of $2.30 from them. So we can take a quick peek at them. I haven't really bought a lot into Ally over the last couple of months. They've been really growing as far as their stock. And sometimes it's a little harder for me to put money in as the stock goes up consistently versus when it's kind of going up and down a little bit because I don't have as many buying opportunities. I don't want to be paying a high price for them, obviously. So I have a total of 12.10 shares of the company. So my average share price is $18.43. And you can see that the current price point is $30.67. So right now, if I were to be buying every share like over the next couple of weeks, my average is going to shoot up immensely because obviously there's a huge difference in cost there. You could see I'm up over $153. 148 is gains, and $5.60 is actual dividends that are earned from this company. So that's why I don't just focus in on just the dividends. I do care about gains because it'll take me a long time to earn $148 from this company just by the dividends alone. So there are some benefits to having both focuses, dividends and growth at the same time. Their dividend yield is still not bad at 2.41%. So if I did want to buy more in, I could. But again, because of how the company is kind of moving along right now, I'm kind of holding off and seeing if there's maybe opportunities later down the road to buy more into them as well. And then let's go back here. Like I said, we had 3 companies pay on the same day. So the next one after that was Costco, also on the 13th. You can see there. And then it was 58 cents. So not a lot from Costco, right? But if you watched a previous episode, we actually talked about how Costco is paying out a special dividend for anybody that is invested by November 30th, which by the time this video comes out, it will unfortunately have passed for that opportunity. But you get 10% or you get $10 in a dividends payout per share that you own of the company, which is pretty nice. It's about 2.5% at the time of the announcement. So you can see right over here, I actually have a full share, almost a little over a full share of Costco, which means I'll get that $10 full plus whatever else, and I can use that to reinvest in Costco or anything else in the rest of my portfolio. So right now, they have a dividend yield of 0.7%. So again, pretty abysmal, but if we go back over here to seekingalpha.com, and let's go ahead and take a look at where Costco is with their dividend growth. This is the things that I like to talk about and I like to look at because it fascinates me. So their 5-year average right now is 14.52%. We'll take a look and see how their last 2 years, have had their increases go for. And their payout ratio is so low. And the lower this is, effectively, that just means the safer the dividend can be. It's no guarantees that they wouldn't potentially stop it. Just keep that in mind. But what this really does do is show us the opportunity to have the money continue to grow every single year because they're not putting so much into just the focus on dividends. They can focus in on other areas of their business. So what we're going to do is look at the dividend news here. So there's that $10 special dividend that I was telling you guys about. The ex-dividend date is December 1st, which means you had to have bought in by November 30th, and you get that $10 on December 11th. Let me know in the comments if you are somebody who's going to be getting partial or even full shares paid out for that special dividend. Like I am, I'm excited for that. So you can see here on April 15th, they had a dividend increase of 7.7%. Again, also lower than their average. Obviously, in 2020, I'm not taking into account their averages because of everything that was going on. I know a lot of companies were kind of holding back or being very conservative when it comes to their dividend increases. A lot of that judgment is going to happen in 2021 if I want to keep these companies, if they're going to hopefully bump up their, amount that they're increasing their dividends with, or if they're going to still stick really low, I might consider either moving out of those companies or maybe not buying any more into them. So we'll see that. If you guys are following along in the videos, just make sure you hit that subscribe button. You'll get notified with videos and you'll see me, sell out of companies. You'll see me buy into companies if those things do happen. If I go back to a year ago, so back in 2019, this falls in line a lot more with their average for their 5 years, which is 14% dividend increase. So again, imagine if you owned Costco already and you got a notification that you got a 14% raise. That is freaking phenomenal. Now, granted, when you look at these dollar amounts, 57 cents all the way to 65 cents, is not a lot of money, but if you have multiple shares, that starts becoming really impactful. And so it's a really cool thing for me, and I've done calculations in the past, and maybe I'll show you guys again in this video, where because of the dividend increases over time in 15, 20 years, the amount of money I'll be making in dividend income is going to be substantial because of these increases, more so than, the company's actually paying themselves out. I'm talking about $15,000, $20,000 in dividends a month based off of some of the projections that I have. And I'll show you guys that possibly here as well too. So let's go back to our activity feed here. We're going to go to dividends again. And then the next one that also paid out on the 13th, and this is my only monthly paying dividend stock. Everything else is quarterly or doesn't pay dividends at all, which is 5 stocks in the portfolio. Realty Income came out to $2.65. So this is a company that pays out every month, and I'll actually show you guys here just so you can see. So if we just break this down to Realty Income, so this is obviously all the same company, and you can see here, when they're getting paid out, like for example, February 14th of 2020, we were getting paid out 16 cents. Then it jumped to 18, then 36 or 38, 55, $1.55, $1.85, $1.93, 209, 247, and then now it's $2.65. So you can see there was a huge jump over there at some point because the stock had gone down so significantly that it was definitely worth me paying more into them. But as the stock was starting to go back up in price, I started buying less and less because they don't really increase their dividends by a whole lot like we saw with Apple or Costco. So for me, I only buy when they are on a downward trend, which if you watch the market with Realty Income or a lot of other what they call REITs, which are real estate trusts, a lot of times they will have pretty big ups and downs. So if you're patient enough and if you're willing to pay attention to these things, you'll see those trends of the ups and downs. Let me see if I can show you here. So let's go to Seeking Alpha again. And I'm gonna go to my portfolio. And we're gonna take a quick look here, right? We're gonna get an idea of what we're talking about here, so you can kind of see kind of the moves that I've been making, right? So let me go to 10 years really quick. So you can see here on this chart, so for the most part, they stay fairly steady. Then they have a nice spike, and then they come down. Then they kind of are steady. They go up a little bit, then they come back down. They go up. So you can see these trends where obviously a lot of other stocks typically have more upward trajectory, where these guys do have an upward trajectory, of course. But you can see that there are times when it just kind of like falls down a little bit, comes back up, falls down. So I like to buy in these spots right over here. And then obviously when they're up here, I avoid trying to buy anything into them just because that means they're at their peak. I'm getting less, dividend yield on my money because if I'm buying, at 15% higher, that means my dividend yield is much lower. And because they don't increase their dividend a lot, it's going to be harder to keep up with that. So as an example, their 5-year dividend growth is 4.38%. And over the last year or two, it's been a little bit lower than that. It's been closer to 2.5%. Kind of just keeping in perspective here, the average inflation is about 2.5% for, the economy in general for the US. And so if a company is paying me just enough for inflation at 2.5%, that's at least keeping me up with the inflation cost, right? Because if I have $1 today and, next year it's going to be worth less money essentially because I could buy less with it. But if I have, dividends growing at 2.5%, that dollar will still be worth $1 next year. And so that's okay. It's not fantastic, but it's okay. Anything above 2.5%, that means we are making more, our money is going to become more valuable next year than it is today, which then of course entices us to want to keep those dividends being earned or, constantly saving more or investing more for it. This is why, by the way, if you ever hear people telling you not to save your money into the like a savings account because it actually becomes worth less, that's actually very true. Your money actually becomes less valuable if you keep it in a savings account that holds very little money. Now that doesn't mean have a little bit of money for emergencies and stuff like that, but just something to keep in mind. If you have large sums of money, you probably want to start doing kind of investments or looking at other opportunities for growth, because anything under 2.5%, you're losing money essentially. Here on the 16th of November, we got paid out from AbbVie for a total of $3.68. So if we go into AbbVie over here, of course, in our health sector, in this area, we can see here with AbbVie, we're up a pretty healthy amount, nothing too spectacular. My health sector is a little bit smaller percentage. This has a total gain of $54. You can see that a majority, again, is from market gains, and about $6.78 was from earned dividends. And I have about 3.27 shares of this company. Their dividend yield is 4.5%, so nothing too shabby. I could still be buying into them if I really wanted to, but let's see how they're doing over the last month has been fantastic. The last week has been pretty good. So I might hold off on buying more temporarily, but we'll see how things kind of play out over the next couple of weeks. So then after that, we got Hasbro also on the 16th. For some reason, they sent me two little things, but it still equaled out to what I was expecting. So you can see here, one was 204, the other one was 5 cents. So a total of 209 was from Hasbro. So if we go into the consumer products here, so Hasbro is actually one of these companies where I'm really debating on if I want to keep them for the long term. I got some really great gains from them for just buying a small amount. You can see I have about 3 shares of the company, paid on average $73 for them, and they're at 92. So made a healthy profit here if I sold, which is $58. I've earned about $4.27 in dividends, but I just don't know if I see them obviously for the long term or not. I'll make that decision later. And again, if you're subscribed here, you'll be able to follow along when that changes. If I end up, deciding to sell that, I'll share with that, information with you guys as well. So if we go here to this area, also on the 16th, so we got paid out quite a few times on the 16th. So it's always nice to get paid out from a whole bunch of companies. So we got paid out from Procter & Gamble for a total of $1.28. So this is a company that I do buy into as well, but they're also in my consumer products, so they don't get a lot of love, to be honest. I want to put a little bit higher percentage in here, but the problem is these don't perform very well all the time, but I still want a little bit of diversity in my portfolio. So you can see here, total gains is only about $31 in comparison to some of the other stocks you saw. And then the earned dividends about $2.73. I have, 1.83 shares, so nothing too spectacular. It's not like crazy. But still pretty happy with the performance. Procter & Gamble, let's see where they sit when it comes to their dividend increases. They're a lot older when it comes to, paying out dividends. I think they're a dividend king. Let me go double check here. In case you don't know what a dividend king is, it's when they pay out dividend increases, for over 50 years, and they've been doing it for 64. So they've definitely been doing it a long time. You can see here their 5-year average is 3.13%. So just a little bit above inflation. So for me, I'm just like really debating if I want to keep this one either or as well, because the growth is not fantastic in comparison to some of the other stocks I have. The dividend yield's okay. It's at 2.28%, and I would be totally okay with that if this was a little bit higher. So that's why I kind of have these decisions in my head of do I want to keep it? Do I want to sell it? Those are things that are going to run through me, and I'm going to make those decisions here so you guys can follow along with that. And then let's go back here. And then, of course, you can see here, we also got paid out. Oops, let me close that there. We also got paid out from Starbucks on November 27th. So that Starbucks, and it was a full $1.50 even, which is really, really nice. Actually, that money is still technically in my cash balance right over there. So if we go to retail and we go to our Starbucks here, so you can see Starbucks, we have a total of almost $69 in gains and pretty much $2.93 in earned dividends. So we got a lot more from gains than dividends themselves. And you can see here our shares, we have about 3.34 shares, and I paid about $77 a share, and they're up to $98. So right now they are definitely quite a bit higher. I think they're right around their 52-week high, so I've been holding off on buying more of them just because of that. I'll see if they stick around a little bit higher or if they're going to have a nice little drop, and then I will buy them during the drop because that's what I typically like to do. So what we're going to do is hop over to my dividend sheet as well. So if you guys have been following along, essentially this is something I put together. If you're interested in it, I have it entirely for free in my description box. You guys can check it out. I just put it together just so I can keep track of how much I'm earning in dividends. So everything I've earned so far in November, you can see here, I've earned a total of $30.20 for the month of November, all in just dividends, not including all my gains. So that is actually the highest month by 20 cents, which is fantastic because one, this is actually the middle of the quarter, because usually the first quarter is the slowest, the second quarter is decent, and then the third month in every quarter is usually the highest paying out month based off of the companies that I have. So to actually get paid out the most in the middle of a month versus, my last month in a quarter is fantastic. You can see here, September of 2020, I got paid out $30. So that comparison right there is pretty cool. So what I like to do too is when I do comparisons, I like to see obviously where I was a year before. So November of 2019, I had 74 cents. Not a lot. Obviously, I was just getting started like we talked about. I put in $100 and then I slowly started investing. But what I also like to do is, how was I in the last quarter in that same month time, right? So this is the second month. Where were we in the second month of the last quarter, which was in August of 2020. We were at $21.81. So a pretty nice increase, almost $8.20 or 40 cents. So for us, that's a huge amount of extra income that we're getting in now. And the nice thing is, I haven't really changed a lot since I think July, as far as which companies I have and what I hold and how much, obviously since then I've been increasing the dollar amount that I have in my portfolio, which increases the shares. So I'm getting more payouts, which is really, really nice. And hopefully those payouts continue to grow, get those dividend increases, and you can see how that's going to have an impact on how much I'm actually going to make over time. So right now you can see here, so for Q4, because we're just finishing up the second month of the fourth quarter, we're at $42.25, which is fantastic. And then year to date, we are actually at $138.97 from M1 Finance. This is all my M1 Finance stuff. I still have a Vanguard retirement account that I love to talk about and have dividends, and I'll show you guys those ones when those come out with dividend payouts. You can see here on this chart right over here, I also broke down how much I make on average every month in dividends, because one of the big goals is to get to 1,000, but we also want to get to, like $25 a month, $100 a month, and get to those milestones. So I want to keep track of that, and you guys can follow along. So right now, because we are 11 months in, you can see here $12.63 on average. And I think we're going to blow that out of the water pretty early in 2021. I think we're going to be within the first few months, we're going to be really, launching this up past, $20, $25, maybe even $50 a month, which will be fantastic to see. And then our total that we've ever earned from M1 Finance in dividends has been $147.49. The really nice thing about that is every single one of those dollars have been reinvested back into the portfolio. So that way that money can start working for us as if we put in $147 of our own money, but that was money that was given to us from these companies as a payout. So to me, that is just the way to compound and to way to really grow your portfolio, is just by constantly investing more back into the portfolio as best as possible. Obviously, we can't always do, a lot of money. So if you got $10, $20, $30, keep doing it that way, because that will still have an impact. Smaller percentages, but still it's going to have huge impacts long term for you as well. Now, I did mention that I will show you guys kind of what my projections are when it comes to having dividends for, the future. So my portfolio is sitting at, let's see here, let this load up, 17,404. So I'm going to do 17,404. Right now, I'm putting an average of 800 to 1,000. So I'm going to just say that we're doing 1,000 a month. I know not everyone can do that, but once you can, you can start rolling up higher and higher. Start with, $50 a month if you can. That'll still go really nicely for you. My average dividend yield is about 2.23% based off of where I am for my yield on cost. And we also have our dividend growth. So this is, like we talked about, what your average growth is. We saw some companies paying, on average, 7, 8, 10, 12%. Some companies like Procter & Gamble were only doing 3.3. But if we averaged it out, we're going to kind of be a little conservative and say 10% growth year over year on dividends. And then our annual share price, how often does that grow? We're going to also be very conservative, and we're going to say that is 10%. And then we're going to invest for 20 years and see where we're at. So if I just kind of scroll here, obviously one big goal is to hit over 1,000. You see a lot of YouTubers talk about that. That is going to be around technically, I think it's going to be around year 8 or 9. I don't think it's going to take till year 10 over here. But if we keep scrolling down here, you can see in year 20, if I stay the course, if I pay attention and I'm focused on this, I will earn $140,000 in dividends a year. Let me bring this up here so you guys can just see this in larger numbers. $240,599. Obviously, if you divide that by into 12, that's on average going to be $20,000 a month. Some months are going to be much higher. Some months are going to be a little bit lower, just depending on the companies I have. But $20,000. Now, obviously, I still have to pay taxes on that stuff. Keep that in mind. But I don't know anybody that would complain about having $20,000 a month coming in, not having to work on that stuff. That's money coming in from these companies that you own, but you have to be diligent. You have to be paying attention to those things because, you know, if companies are going downward and maybe you're not going to be in business for long, you got to make sure you're out of them or finding new companies that will have that trajectory to be around for 20 years and pay you out that money. I'm projected to have about $2 million in value in this portfolio as well too. So I'll be excited to see all of that as well. Like I promised you guys, I will also show you just a very quick breakdown of some of the things that I'm buying right now. I'm putting in a little over 200 for this week because a little bit was from the dividend payout, which is nice. But a majority of that is going to go into just a few different companies. Vanguard is going to get about 40, Home Depot and Microsoft 20. We got Amazon and Costco at 15. This is so that way I can get a little bit more of that special dividend because by the time this goes in, it'll be for November 30th. And then we have DLR at $15 and then Apple at 10 and then a couple other companies here and there. So that's going to be kind of like my breakdown of what's coming out with my trades because obviously I want to keep on investing even when the market is doing well because if we look, right now, for the last week, the market has done very well. We've gained over $472. In the last month, we gained over $1,200. And I remember people talking about how, you know, towards the end of October, things looked like they were going down. We didn't know where the market was going to be. So a lot of people were holding off. Well, I kept investing. I kept putting money in because I'm not afraid to, you know, see the market go down and still be buying back more into the market, even though I just invested. So for me, I'm constantly investing and constantly putting money into this account so that way it can grow. My dividends can grow and I can see those yields. Let me know in the comments down below as well, how many companies paid you out for the month of November. If you want to share with us how much you made too, you're welcome to do that. But until then, I want you to watch this next video right over here because if you keep on watching and learning and growing with these kind of journeys on dividend investing, it might help you in your journey and get more excited to constantly be investing and staying the course. My name is Dennis Trufin, and I will see you in that next video.